turn to member questions. The chair now recognizes himself for 5 minutes for questioning. Ms. Johnson, let me start with you and ask you about UDAP. The CFPB director has used his UDAP authority, not his rulemaking authority, to force lenders to make operational and policy changes. For example, I've heard a growing concern that during the pendency of an examination, the CFPB will release new and or updated regulatory guidance pertaining to UDAP. The financial institutions are left to chase a moving target, sometimes even resulting in an examiner critique. Ms. Johnson, does this practice allow financial institutions to plan for unforeseen regulatory changes?
No, it does not. And that example that you're giving is, we've seen it as well. We've seen the Bureau and the director himself stand up at a press conference and say something's illegal and actually announce an enforcement. And it's, for banks who have been following the law, who pride themselves on following the law, who that practice or that product was allowed every single day until that point in time, to have an enforcement action come down, to have a headline come out, and to have that enforcement applied retroactively, it's like changing the speed limit. And before you even change the speed limit signs, fining people for every day that they drove this previous speed limit. So it's very concerning.
I liken it to the Supreme Court justice who said of obscenity, I know it when I see it. Abusive is for Director Chopra, whatever he sees. And regulated parties don't know what the law actually is. It's a moving target. What can Congress do to prevent the CFPB from abusing its UDAP authority?
I think one of the most important things is to really, your bill, H.R. 6789, which clarifies the CFPB's authority under UDAP and really ensures that they can't apply something that hasn't been done by rulemaking and apply that retroactively. There are a lot of important instances where UDAP could be applied, but we want to make sure that they're operating within four corners of what Congress is allowing.
I invite my Democratic colleagues to take a look at that bill. We want clarity for banks and credit unions and lenders so that they know what the rules are in advance so that they can comply better with them. If my colleagues want good, clear rules of the road on consumer protection, this fix is much needed. On fees, let me ask Ms. Harbin, conspicuously missing from the Biden administration's and their proxy, the CFPB's dialogue on junk fees, and we'll hear about it tonight, no doubt, is the fact that the type of fees they're villainizing are charged by government entities every single day. The CFPB itself charges fees for Freedom of Information Act requests. Are those junk fees? The District of Columbia charges fees for parking violations and doubles the amount you owe if you don't pay within 30 days. And if you have 2 or more outstanding parking or photo enforcement tickets, they have a right to put a boot on your car and you must pay a fee to have it removed. Is that a junk fee? The IRS pays 0.5% of unpaid taxes for each month the tax remains unpaid. Are IRS late payments penalties? Are they junk fees? The reason local, state, and federal governments charge these fees is for the same purpose that banks and credit unions charge them, because fees help shape behavior. This isn't rocket science, it's Econ 101. And yet the CFPB discounts the notion that fees serve this critical role as a deterrent and instead seeks to paint financial institutions as tricksters who would do anything to make an extra dollar. This is absurd. Ms. Harbin, would you discuss the necessity of charging fees and how doing so helps my constituents in Central Kentucky?
Yes, thank you, Congressman Barr. Running a financial institution today is very costly, and it comes in many forms. We use AI-powered technology to serve more vulnerable communities. We make loans with those with moderate income, and that's a very costly thing. We also provide free checking accounts, HELOC loans with no closing costs, no late charges or no annual fee on credit cards. So there's lots of services we provide to our members that are very costly that we absorb. We also bear all the fraud, and the merchant bears no fraud when a fraudulent transaction takes place. Their compliance costs are very expensive. In 2023 alone, we spent over $1.3 million on compliance costs, cybersecurity tools, and fraud related to transactions that our members took place.
And Ms. Johnson, really quickly, what will the credit card late fee proposal do in terms of the cost of and access to credit?
Well, It's one of the most important questions that needs to be asked. In terms of the cost of credit, even the CFPB itself acknowledges that 74% of people who pay their bill on time, including 50% of people who are subprime borrowers, will see their costs go up, and those folks are living paycheck to paycheck. For people that are on the margin, that are frequent late payers, they're going to see long-term costs go up. Their credit score is going to be damaged, and it's going to be...
My time has expired, but how obnoxious that the Consumer Financial Protection Bureau will increase the cost of credit for on-time credit card users.